This war was not fought only in trenches with cannons and rifles. It was not lived only with bayonets and barbed wire. The First World War was also a war of money, a war waged in gold reserves, bond markets, central banks, and in the closed offices of financiers who never set foot on the battlefield. Soldiers paid in blood, bankers and governments calculated balance sheets, and the financial moves made in those years did not only determine who would win and who would lose, they also fundamentally reshaped the global monetary order we still live in today. If you think war is only about politics and armies, think again. The First World War proved this. Money is also a weapon, and one of the deadliest ever invented. In 1914, Europe was already like a powder keg. Nationalism, colonial ambitions, alliances, everything had turned into a chessboard of paranoia. But beneath the speeches about honor, empire, and fatherland, there was a much simpler and harsher reality. It was impossible to wage a war of this scale without unimaginable amounts of money. And the bitter truth is this. When leaders chose war, they also chose debt. Every army marching to the front lines was also placing its people under a future economic burden. At first, most governments believed the war would be short. They thought it would be over by Christmas. They assumed they could pay for it the old way, some gold, some borrowing, and some donations from the public. Within weeks, that illusion collapsed. The war was consuming money at a speed no one could predict. At that time, Europe's financial system still revolved around the gold standard. Paper money was backed by real gold. This system created trust, but it also tied the hands of governments. Because gold was limited, they could not print money endlessly. But once millions of soldiers went to the front and entire industries were turned into weapons production, the numbers exploded. By the end of 1914, Germany was spending more than 10 million marks per day. Britain's daily war cost quickly rose to £2.5 million. The mathematics was merciless. The gold would not be enough. So governments broke the rules. One by one, they suspended the gold standard. In other words, without openly saying it to their citizens, they accepted this. Money was now backed by nothing more than faith in the state. That moment, the breaking of the gold anchor, was one of the biggest financial ruptures in modern history. Money detached from metal. It became tied to printing presses, credit, and persuasion. And once governments tasted that freedom, they could never go back. Germany was isolated from the outside world. It was under naval blockade. There was no chance of borrowing from abroad. The only option was its own people. They sold massive war bonds, posters, propaganda, heroic soldier images. People were asked to give their savings for the fatherland. 100 billion marks were collected. But this was a pyramid built on hope. When the war was lost, those bonds turned into worthless paper. The savings of millions of Germans disappeared. That anger later created fertile ground for extreme ideologies. Britain, however, had a huge advantage. London was the financial center of the world. Sterling was trusted. And most importantly, Britain reached out to America. In 1914, America was neutral, but its bankers saw the opportunity. Giants like J.P. Morgan arranged enormous loans for Britain and France. They financed purchases of weapons, food, and raw materials. When America entered the war in 1917, Wall Street had already been funding the Allies for years. This was not aid. This was power. By the end of the war, America transformed from a debtor nation into the world's largest creditor. The American century began not on the battlefield, but in accounting books. France similarly sold bonds to its people, but the real money again came from across the Atlantic. Europe's post-war dependence on America shaped politics and economics for years. Russia, on the other hand, collapsed financially. Inflation exploded, the currency lost value, and the system disintegrated. The fall of the Tsarist regime was driven not only by ideology, but by economic devastation. When the war ended, there were not only ruined cities. There were ruined balance sheets. The gold standard was shattered. Inflation was eating through economies. In Germany, bread was sold for billions of marks. And as always, the heaviest blow was felt by small savers. The wealthy found ways to protect their assets. Those close to information and power positioned themselves early. Small savers were crushed. And this is where the connection to today begins. The First World War taught governments this. You can finance unimaginable things with money detached from reality. Suspend gold, print money, sell bonds, borrow, and later fix the ruins with restructuring and propaganda. Does this sound familiar? When the guns fell silent in 1918, America held the world's largest gold reserves and the largest creditor position. Europe, meanwhile, was drowning in debt. The Treaty of Versailles imposed 132 billion gold marks in reparations on Germany, a debt impossible to pay. What followed? The hyperinflation of 1923. People carried money in wheelbarrows just to buy bread. In 1925, Britain tried to return to the gold standard at the old rate. Doing this while the economy was shattered was like forcing a broken bone back into place. The result: unemployment, deflation, and unrest. Meanwhile, America was lending money to Germany. Germany was paying reparations to Britain and France, and they were paying their debts back to America. What looked logical on paper was actually a circular financial illusion. In 1929, the system collapsed. This is why the First World War is not just military history. It is also a turning point in modern financial history. It proved that governments could abandon gold, print money, turn debt into patriotism, and convince the public to buy worthless bonds. And today, when central banks say inflation is temporary, when governments constantly raise debt ceilings, when digital money is created with the press of a button. Remember 1914. The playbook was written then. The lesson is this: money detached from reality becomes a tool of manipulation, and in this system the ones who pay the highest price are always ordinary savers. Real wealth is not the numbers you see on a screen. It is knowledge, awareness, and resilience. History does not repeat itself exactly, but it rhymes. And those who do not learn to read balance sheets remain trapped in the same story. If this perspective opened a new window for you, subscribe, hit like, and leave a comment. History has the answers. I will show you where to look.